All right, today is the Monday, the 9th of October, 2023. Currently looking at EU, um, and we're looking on a 30-second chart right now. And I will talk about this potential entry. Now, I didn't take this. I didn't. Well, I did take. I wanted it. I had a live order, but I didn't get tagged in. Okay, but you can see how close we were to getting tagged in. Right? And you can see the initiation. And so I kind of want to talk about this trade today because even though I didn't get in, I want to talk about why I wanted to go long here and why here was the correct time for me to go long. So the best way to explain this is to start off from my sell side drawings, and so which is what we're on right now. Let's go to the higher time frame look because it's quite explicit. Uh, ex- it's good for explaining it on here. Explicatory, I think is what I was trying to say. Okay, so high time frame mitigations, high time frame, high time frame, high time frame, and then we push down, broke structure, and we're kind of rebuilding up, right? So we're looking at like, okay, well, it's likely that we could mitigate something in here and have continuation, right? That's really where we're at. We're looking for continuation. And so as this gets put in here, once we jump to a lower time frame, we start to see something kind of different happen that isn't typical. All right, so here's that mitigation first of all, right up here. So you zip up. Now the first thing I notice is there is no initiation range created. And so, what is an initiation range? An initiation range is where you have back to back primary ranges put together. And they do that, the market makers and the people who move the markets do that so that they take liquidity from one side, from another, and then from another side again before they make their moves in the correct directions that they're looking to go for, right? And the reason they do that is because it's liquidity, right? It's a liquidity game. They want money. They want to get as many orders as they can. And so by taking liquidity three times, they're able to get maximize on liquidity in that area and then initiate the price in one direction. It's how they've been doing things just forever. Okay, we can spot them. We know how to spot them, and I haven't actually got any drawn on this screen now. Whether there are or are not on here, I don't know. It would take me analyzing like lots of these movements. But suffice it to say, there is no higher time frame initiation that occurred at this point of mitigation. Oftentimes, it will happen right at the point of mitigation. And at the point of mitigation, they'll create that range that does a initiation, and it will initiate low prices in this instance, right? Now we didn't get that. So what we did get though instead was a higher time frame and a lower time frame mitigation. It looked really good on paper. It did. It looked like a really good mitigation. And so as we see the mitigation occur, they take out a transitional order block here, and so now we can start to look between A and B and see what the heck went on. Well, we had this primary range in here, so we're expecting price to hold inside that because it was the last known one, and then we're expecting price to push. What happened was, and this is why I've got this dollar symbol up here, is that we did not get a higher time frame or a lower time frame mitigation. Uh, we didn't even get one of them. Is what happened. If I zoom in, we can sort of see it, but I'll tell you exactly what happened. This is a higher time frame sell primary. It doesn't get created until the bottom here is taken out, which it does eventually. But by this time here, at this point in time, let's put replay tool on. We haven't actually broken the bottom, have we? Right? Just come up top. So what have we done? Well, we created this range that went over the top of a few wicks in here and then broke structure coming below here. So that's a primary range. And inside of that range was another very lower time frame primary range. And so we were always expecting this to hold. So when we see things like a touch up here and it takes out this transitional, this could be considered a really good trade short. Okay, and same thing here. Once we see a touch here and it goes through a transitional, we could be thinking this could be going short from here. What ends up happening is they take a tap, and the tap goes over the top of this range. It's hard to see, but that arrow is going over the top of that range and mitigating right there. Okay, it doesn't break the high here, but it goes over the high here. So it's a very sort of awkward mitigation, very, very macro scale. And so, not what I wanted to see if I'm expecting shorter prices, right? Not that that matters that much, right? So we had that happen, and then I'm thinking, okay, so we're short, right? We're short because of crappy mitigation up here, and then here's why I think you're short. Boom, slams through, takes out the low here, and now we've created this higher time frame sell primary. So I'm still looking at things, right? So I'm looking at this, going, I've got a big old question mark in my head going on when I see all this, and so I just draw cause. I just put dollar symbols up there because that's what it means to me. Then I see the same thing happen over here. We get the transitional mitigation here, which is basically, yes, they came up and they just mitigated right in here in this sort of block. Why did they do that? Well, this is a transitional. They did it because they're mitigating actually something that's all the way through here, through this range. And what do transitional mitigations mean to us? They mean that they can cause a break in structure. So even though we don't know exactly, can't predict where they're going to stop because it's transitional, there's transitionals everywhere. What it does is it adds liquidity. Number one, absolutely all transitionals are almost all the time taken, in my experience, by looking at the charts, and we expect a break in structure, or a break in structure can occur. I guess that's the best way of saying it. So we had that. So we've had one event at the top here, which is giving us a question mark. We've got a second event at the top here that's given us another question mark because it's a transitional. And then we start to see this kind of stuff. Higher time frame and lower time frame mitigation, higher time frame only, right? So on this one, didn't get the lower time frame. So I'm putting dollar symbol here again, another question mark. Like, why? What the hell's going on here? And so as we're working our way down, seeing lower prices, this is the kind of time when I'm start to looking at the screen and going, what's going on? And so the first thing I thought, as soon as I see all these question marks and dollar symbols that I've drawn on my chart, I go, let's look at the buy side real quick, because the sell side is looking a bit funky. Something's going on here that I do not recognize, do not like. It doesn't make sense to me. These aren't mitigations like I expect them to be. So let's jump to our buy side drawings and see what the heck's going on. So this is now the 1 minute on the buy side drawings. And I'm kind of following intention, following price, and what's been going on, right? So first of all, here's that sort of mitigation up here, right? The sell, and let's pull this down. And then what we're looking for is to see the higher time frame buy primary and what happens. So here was a higher time frame and lower time frame mitigation. Boom, absolutely beautiful because it connected to this range here. So this one ticks all the boxes, right, for a decent mitigation. Higher time frame, lower time frame. And then so I'm watching it, right? So I'm looking and watching. So as we initiate and break structure, what happened between A and point B? And I look in between here and I see that this is a primary range. I see that we've made a higher time frame primary range here. And so what do we conclude about this mitigation? It is a higher time frame and lower time frame. Okay. They took a little bit more down here. Same thing, higher time frame and lower time frame. We then initiate higher prices and we get this pullback. At the point of this pullback, the reason I've got this green box here is because it shows that yes, it was a higher time frame and a lower time frame. Let's zoom in a bit. It was a higher time frame and a lower time frame, and I even wrote a meaty mitigation because it didn't actually like tap like a smaller range. It tapped sort of either the bottom here or just below it. And the moment that mitigation occurred, I pull this green box over here to represent in my visual sense and to my head that until we get a break of structure, we can come back for more anywhere in here. So it's like green means go, right? Green, full send kind of thing. Yeah, we can totally take another mitigation. And then they come in with this high time frame mitigation with no lower right here, right here. And I've written that with no lower. I'm not sure if this one actually went and touched it exactly. Yeah, it did touch it. And so this was kind of a questionable range to me at the time when I did write that. Upon further investigation, this one actually did. This one did actually mitigate a lower time frame as well. So let me put that in here. Higher time frame and lower time frame. But in the moment, it was hard to sort of spot because when you zoom in, this is a silly little range, really. If you want to sort of see what I'm talking about, Let's go to 5 seconds just so we can all talk about it. So we can all sort of see what's happening. So I think what I was having here is we've got a range here, initiated, and then it came back on itself and broke open, right? It broke over. But it was I think it was the break-in structure that was sort of skeptical because here's the top, right? Look at what structure are we going to take on here. It only got as high as here. So was this structure? It was on a 5 seconds, but it wasn't like a decent one. But hey ho, it's a lower time frame mitigation. We shouldn't ignore it because it could become the one. And in this instance, it actually did become the one. So back to 1 minute chart. So we had a higher time frame and lower time frame mitigation. Again, didn't really like it too much. Now, what I should have done here in this moment here is drawn this box all the way to the bottom of this range, which is the one it was playing, and turned it green, right? Representing that we can still take more mitigation in this area because we haven't broken structure. We haven't done a continuation structure yet. But anyway, that because this range here becomes important because as we do initiate and break above, like this has now become the new higher time frame with a lower time frame in here as well. This box here. So if price does pull back, this is where I'd expect to initiate and again higher prices from. All right. So let's just drop to 15 seconds because now we're going to start talking about this trade idea and why it's sort of formed. So I've had that mitigation. Okay, this one down here, and I'm expecting what? It to go through a transitional order block. If you look at this one right here, this order block right here, this purple box, this one went over the high of all of this activity here, right? They did some trading activity, and then they pushed over the high of it, and then they pushed down. So what that's really doing is telling me that we could be. It's almost like an initiation. We're in a liquidated state. We push up into another liquidated state, then we pull back down into another liquidated state, and then initiate, right? So this is like the initiation protocol, but it's not as visible. Like it doesn't make complete sense when we see it because we could say, well, were we in a liquidated state here? I guess, were we in a liquidated state here? You need to sort of take it off a really low structure. Like this wick here would have acted as structural break. It's very low time frame. So for that reason, I don't consider this an initiation. But they did do the entire protocol, which is take liquidity 3 times. Liquidated state, liquidated state, liquidated state, and then they initiate price. Okay. So it is an initiation down here, but it's so low a time frame, it's not worth drawing. But this high here is very important. As soon as this, not as soon as this high gets taken, well, it is actually, I beg your pardon, it is as soon as this high got taken. You see, it just got taken by wick over here. As soon as that high got taken, I'm thinking to myself, oh shit, we've just had a really nice higher time frame and a lower time frame mitigation in a really good area. We haven't got any question marks, right? Everything looks good to me. Everything's mitigating nice. There's none of these question marks that I've been drawing around. All of the mitigations work as far as the way I analyze things, etc. We've just had a mitigation right here, and we've broken through a transitional order block right here that has only just nibbled it and just broken. And so the thing I'm looking at, right, the first thing I'm going to do is do this. I go to a low time frame. I'm going to look from my point A, the mitigation, up to my point B, which at the time was here. Let's go back on the replay just a little bit more. Let's go to this bar. Okay, point A, point B. What happened in between point A and point B? That's what I'm looking for. That's what I'm looking at, right? And I drew this arrow here, but I drew it backwards, okay? Because I identified my primary ranges. First and foremost, I'm looking at what happened between A and B, and I'm seeing, and I guess I'm looking behind too, obviously, right? In this case, because I'm like, well, this made a primary range, okay? It went over the top of this one that broke some structure over here. Okay, so there's a primary range. But this primary range didn't just start here, did it? It started here and it started here. So we could say that from this point here, A, all the way down here and initiate is a primary range. It is for sure because it went over the top of this range. Right? So we've got that one, check. We've also got this one because it's a lower time frame, check. So this one's fully activated and this one's broke on itself. What that does is gives me 2 primary ranges in a specific area, right? Let me clear this up. So when price came down to here and mitigated this block here, I'm looking for a higher time frame and a lower time frame mitigation, and that's exactly what I got. I got this higher time frame and I got this lower time frame, and I've caught this in the moment, right? So I'm like higher time frame and lower time frame, and then I've got this breaker block here. This is my next block that I'm interested in. Why am I interested in this? Because if that is a mitigation, it is going to take out. Think about it. As you're pulling down like this, and let's say we just had a mitigation right here. This is the mitigation. Then they start working price up, right? The first thing they're going to do is take out this range. It has to be the first thing they do, because if that is a true mitigation, they have to take out all of this stacking, all of this order, the orders in here. They have to, because they can come back for them later as well and do other things before initiating higher prices again. But they have to work through it. They have to get through it in order to change direction. It's obvious. It's logical. It's very basic. Yeah. And so that's what's happening here. Here they are initiating lower prices. Oh, we've had the mitigation event, and now we push through this range here. And my expectation is always to come back and mitigate this block here. So let's see what happens. Boom, they go sky high right the way through it, right? And the first thing I'm thinking of, and I should have caught this, I didn't catch it. This is the block that they went through, but they also went through this block here. This block here got transitionaled, turned into a transitional. And in hindsight, I should have seen that and put my order here. That's exactly where I should have had my order. And I should have had my low covering the low, 2 pip stop. Now, do I still get tagged? I don't think I would even get tagged on that one. I think it came close, and then just initiated high prices, right? So now we're going to have to look over this side. This bar here, what did it take out? Well, it took out this as well. So here's the other transitional order block it took. Okay, so I'm talking in hindsight now, right? So we saw how close I came to my entry. I understood market, I understood everything that was going on, got really close to it. Let's just clean this up. Because what happens is they took out this transitional order block and they re-mitigated it after, which is what they always do. After we've had a mitigation event and they blitz through a transitional order block, or I guess just an order block at that time, they then re-mitigate by coming back after the fact, mitigate, and then initiate high prices. It's their way of shooting through certain areas and then doing the dirty deed later. All of this is accruing their position to go long in this instance. And that's, you see the spike candle takes out liquidity or induces liquidity draws, right? Taking liquidity, and then this is adding and stacking to their position. They're just concentrating time and effort into this area to add to their position before going long. So that's what I should have done, is seen between this A and this B and gone, well, where was anything of interest? And sure enough, there wasn't. They just mitigated to 50%. They really didn't. I can't see anything. I'm on a 5-second chart here. I can't see that they did an awful lot here. There might be a range, initiation, break of structure. There might be some sort of block up in this area. I'm not sure, but there definitely wasn't on this initiation. It was just like a solid initiation candle right there. So yeah, range, initiation, maybe. I mean, gosh, it's just so hard to say, but maybe something like this was a buy primary, but it wouldn't have counted, it wouldn't have mattered anyway. And so this is a transitional mitigation right here. It's transitional. They're mitigating something else through it. So what did I say about mitigations like that? They're always going to be cause. Always, in my experience. So that's going to turn into cause at some point. They'll come back, take it from here. But it can also induce a break of structure. That's the other thing. And this one does. It rips away breaking structure up here. And it was just a really good trade to have seen live in the moment. I was very excited by that because I did see all this shit going on here with the custom arcs, and I did think it was kind of odd that we had all of this sort of weirdness going on. So it made sense. It totally makes sense that we're going to run all of this, and all of this is liquidity. That's my expectation. I believe that this is the mitigation. I believe that we're just pushing up high prices from here. That's just from reading price action. That's the video. That's it today. Got nothing more to say on the matter. If you got any questions, comments, feedback, leave me a little message or whatever, and we'll I'll definitely look at that and do my best to help. Peace out, everyone. Hope you're smashing it, crushing it, living your best possible life. Hope your trading is going fantastic. Stick at it, keep at it, do your absolute fucking best, and yeah, go ahead and crush the markets, man. All right, peace out. Catch you on the next one.